Well, U.S. natural gas prices have surged aggressively this week, driven by a sharp cold snap across the northeastern United States. Major demand centers such as New York, Philadelphia, Pittsburgh, and Columbus are experiencing frigid temperatures, with cold advisories and snowfall forecasts reinforcing expectations for a near-term spike in heating demand. From a fundamental standpoint, this raises the prospect of larger storage drawdowns, which have clearly fueled the latest wave of buying. That said, the magnitude and speed of the rally suggest a strong knee-jerk reaction rather than a clean shift in the broader supply-demand balance. Production remains at or near record highs, and it wouldn't take much of a moderation in temperatures, warm enough for drillers to comfortably return to the field, to quickly pressure prices lower. In that sense, the current move looks heavily weather-driven and potentially vulnerable if forecasts soften. From a technical perspective, the market peaked near the $5.60 area before pulling back toward the psychologically important $5 level. This zone is now acting as a key battleground as traders try to determine whether the recent high marks a short-term top. Given how vertical the rally has been, some consolidation or retracement would be a healthy and logical development. I'm generally cautious about shorting natural gas during the heart of winter, even after sharp rallies, because one colder than expected forecast can instantly flip sentiment back to bullish. At the same time, blindly chasing prices higher at these levels carries its own risks. For those leaning bullish, dips and evidence of stabilization make more sense than buying strength. If you're trading both sides, discipline is critical. There's a reason natural gas has long been nicknamed the widow maker. All things considered, a pullback from current levels seems likely, at least in the short term. The open question is how deep that correction runs, and that should become clearer over the next few sessions as weather models update. On the upside, a decisive breakout above the recent candlestick high could reopen the door toward the $6 level, something that was unthinkable only a month ago, but it currently looks like a low probability outcome. With winter approaching its end, traders are already starting to look ahead to spring, when demand typically fades while production stays elevated. In the end, everything hinges on the northeastern U.S. weather outlook. As long as forecasts stay cold, volatility will remain elevated, but sustaining much higher prices will require more than just a brief blast of winter air. Support the channel if you'd like to help keep the content coming. If you found this helpful, leaving a comment really supports the channel. Thanks for being here, see you in the next one.